You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.CFRN.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.CFRN.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 26th day of February, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Let me put up a chart of the S&P 500 Emini Futures. This is a daily chart. If you can't see the chart I have up, go to our homepage at CFRN.net. On the right-hand side, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds, and that'll give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, point any internet-connected browser to CFRN.net/live, and there you'll find a live real-time simulcast of the show as it unfolds live in real time. You can also catch us streaming live each and every day on YouTube, Facebook, and Twitter. All right, the daily chart. As price traded below the VBCA on the daily chart, we established areas prior to it dropping below the VBC. We established this area as a potential place to hold. We caught a bounce, but it didn't hold. We then highlighted the next area where we would potentially find good support. It held, gave us a pretty significant bounce, and then it gave way. There was our next area, and we were talking about this on the show yesterday with John when I drew this little rectangle in, because we were sitting right here, and I said if this doesn't hold, then the next area for support will be here, and that's when I drew this rectangle. And so that becomes a 30-point trade given on yesterday. Radio show. You saw it happen live in real time. Now so far, this area holding as support. So what's this line about? Well, we'll scrunch it up like we did yesterday, and I'll show you. We had a double top here. In other words, this area acted as good resistance. Price revisited, where once again it acted as good resistance. This time, price actually made it through. So, if this area of support does not hold, then you've got another window of opportunity on the downside right there. Okay? That's the big picture from the daily chart. Okay. Let me give you the numbers. Let me give you a little bit of news. Coinbase has released its plan for the coronavirus spread. Every day there are news stories of travel disruptions and public gatherings in Asia being canceled due to the threat of the COVID-19 virus. Cryptocurrency and traditional markets have also been affected, with Bitcoin dropping 3% in value due to the virus being detected in Italy. When it comes to crypto exchanges handling the spread of the virus, Coinbase is preparing for the worst case scenario. According to a document shared publicly by CEO Brian Armstrong, Coinbase is preparing a 4-tier escalation response to the coronavirus. Each phase of the plan will be triggered by an increase in the number of people infected with the coronavirus or local governments responding with quarantines in close proximity to Coinbase offices. Once there has been more than 100 cases of in-the-wild, person-to-person virus transmission, Phase 1 will take effect. Coinbase's plan includes minor measures like increasing the frequency of cleaning their offices and restricting office visitors to essential personnel only. However, it also gives employees the options of working from home. The second phase will be implemented when there are 1,000 cases similar to those in Phase 1, or some form of government-imposed quarantine is in effect. It escalates the Coinbase response by stopping all visitors to their offices and no longer offering meals on site. The third phase, however, comes with a disclaimer. Containment has failed. It's going to be a wild ride. Coinbase employees would be required to work from home, and third-party services in offices for cleaning and snacks would most likely be unavailable for an indefinite time. Offices will essentially be in lockdown. Now, the crypto exchange Coinbase has offices in the United States, Japan, Ireland, and the United Kingdom. A Phase 1 response is currently in place for the Japan office. At the time of the document's release, Coinbase has restricted business travel for its employees to China, Hong Kong, Italy, Japan, and South Korea. Despite these measures, Armstrong remains confident the risk of coronavirus to most employees is low. This is not the first problem Coinbase has faced. In June 2019, the cryptocurrency trading platform crashed, causing the price of Bitcoin to fall by $1,400. Let me give you the numbers from around the world. These are the cash markets, the indices. Starting here in the US, the Dow is up 25 points. NASDAQ is up 35. S&P up 4.5. And the Russell 2000 up 6. In the commodity basket, crude oil down 59 cents, trading 49.31 last. That's a drop of a little over 1%. Gold down $6.60, trading 16.4340 last. In the Asian markets, at the close, the Nikkei was down 179 points. Shanghai was down 25. Hang Seng down 196. And in European markets at the close, FTSE up 24. DAX down 15. The CAC up 5. So that's a red day for Asia, a mixed day for the UK, and so far it's a big green Radio Wednesday here in the US of A. Let's go to Michael, get a recap of everything that happened this morning in the live training room, and then I'll be back. We'll cover the Concierge Trade Alerts, Logic 247, and we'll talk to John if he pops in. Michael, if you're ready, take it away.
I am ready. Had a big morning this morning. Big morning.
Big morning.
Yeah, it was our best day since August last year.
Nice.
And I missed a whole. I still managed to miss a whole bunch of trades because so much was going on.
Gotcha.
But well, I'll start out the way I always do.
I'll hit mute here, and it's all yours.
Okay. Here we go. Good afternoon, everyone. Today is Wednesday, the 26th day of February, 2020. If you have not taken a free trial, and that is part of my everyday thing, where I say before I say that part, go to the homepage at CFRN.net, and over here in the right-hand column, this is 5-day free trial. Apply.CFRN.net. Click on that, or any one of these other green buttons down here, and you will be sent to this page. EminiTrainingschool.com. Now you can go directly to this page if you want to, but once you do, you can read all the stuff that we have on there, and all you have to do is give us your name, your email, your phone number, and tell us the biggest trading challenge so we can tailor one-on-one training for you. Okay? And the one-on-one training is a real thing, you know, and we'll do it while you're on the free trial too. Okay? Hit the send button, and you'll be sent to a confirmation link. You must click on the confirmation link. Okay, if you don't click that, you don't get a free trial because we don't know you took it. Okay? It's called double opt-in, and that's what you have to do. Okay, so let's get to the spreadsheet. On the spreadsheet, if you're going to read it, you got to read all the CFTC risk disclosures down at the bottom. Today is the 26th day of February, 2020. Today, we made 16 ticks on the euro. Crude oil beat me today, and I lost 7 ticks. We stopped out twice on crude. I'll get into that in a few minutes. But gold, we made 35 ticks, and the ES, we made 14 ticks. That put us at plus 555 on the morning session. That's one contract, 2 hours. And I missed most of the trades. But today we took 11. It took 11 minutes. Tim said it took 11 minutes. I thought it took 20, but I didn't fill out my my log for a few minutes. I didn't think it was 9 minutes, but it might have been. But everybody's keeping track of what I do, apparently. So Tim said it took 11 minutes. And I know it took 2 trades to get to $100 a contract. And we took a total of 13 trades this morning. So on the month, we're at $3,558. That's over 16 days, averaging $222 per day. That is one contract, 2 hours per day. And I'm missing most of the trades. On the year now, we're at $6,357. That's over 35 days, averaging $181 per day. Again, one contract, 2 hours per day. And you know, our motto is add contracts. You wrote it down, Tim, when I did it. Good. Well, I didn't write it down. You know, I think I was in a couple of trades at the time, and it took me a few minutes to write it down. And when I looked at the clock, it had been 20 minutes. I didn't think it had been 9 minutes later, though. Anyway, okay, so that's that. Now let's get into this. All right, there was a lot of movement today, and a lot of opportunity. Okay, a lot of missed opportunity for me. Scrolling back to it all. Let me minimize this a little bit. Okay, so it was right here where I got the goal for the day. So you're right, Tim. It was 11 minutes. All right, on gold. Well, our first trade on the ES, I think, was a break even. But on gold, our first trade was right here, picked up 10 ticks. And you're right, it was 11 minutes. And that continued on down right here. You can see there was a continuation trade right there. But I was doing something else, answering something else, responding to something else. Over here, see, we didn't have anything that we could do on that leg up with our normal trades, but we had a 137 right here to grab that whole leg up right there, and another one right there. And let's see, there was a momentum long trade right here that I missed. A couple of trades right in here that I missed. And wait till I get to the ES and you see all the trades I missed over there. I should have started out with the ES. I was thinking about doing that today, but I'm going to end with the ES because pretty much everything I said this morning about the ES happened, and I was trying to do things a little bit different today, and looking at different time frames and a lot of different things on different time frames. And so pretty much everything that I said happened. Okay, so there was a long trade right here and right there that I missed. A short trade right here that I missed. This profitable, this profitable, this profitable. We picked up 20 ticks on this trade right here. And then on this one, we got 5. Okay, I missed that one, which would have been profitable. And it looks like there was one right here that I missed too. That would have been profitable, that I didn't highlight. And then we get into the break. And I mean, I know I've said this before, but these are the good old days. This is great market trading right here. I mean, the opportunities are just all over the place. And, if you're not trading our system, you're trading some other system, as long as you're making money, I mean, it is out there to be made right now. Okay, there was a long opportunity right there. And a short right here. And that was it for gold. Right? The euro, we even made money on the euro today. Because, I don't really like the euro. There was nothing on the euro until right here. It gave a little pop. Didn't go anywhere. Came back. Gave another little pop. Didn't go anywhere. We had a break even on that trade. Then finally, it developed a pretty decent trend. So we jumped in right here and picked up 16 ticks on this. Okay. Now, this is during the break, but there was another move right here where you could have made a little money. and then it just went sideways. Okay, on the crude. Now I ended up losing money on crude today. I laughed because I almost never do that. But we missed this first trade, and I stopped out here, and then I stopped out there. This one was a total stop out. It kept going up. This one was to the tick, and then it turned around and did what it should have done. And then I was picking it back up here, little by little. So it was minus 16, and then I picked up 5 ticks here, minus 11, 2 ticks here, minus 9. Missed that trade. Missed that trade. Missed that trade. And that trade. And remember, crude inventories came out today. So I was not trading in, in like this period right here up until right there. I like to wait 5 minutes after the crude inventories come out. And we picked up a couple more ticks right there. Okay, then we got into the break. And during the break, there was a shorting opportunity right here, and another one right here, and another one. No, we had to establish a trend. Okay, another long opportunity right here, going totally against everything that was going on here. And that was it on the crude. Okay, now the ES. Let's jump to a different time frame here on the ES. We ended up with plus 14 ticks on 5 trades on the ES. I'll get into that in just a minute. What I was looking at on the ES, we started out right here with this huge candle up, right? On the 30-minute, it's a 45-point candle. It might even be right here. 41 up to 75. No, on the 30-minute, it's a 45-point candle. But then it started to retrace, and I was showing everybody I draw fibs, and this right here, I was eyeballing it before I actually even drew it. I was just eyeballing it, and I said, no, it's probably gonna catch down here, because this is like 62% area. And then it went up, and when it was going up, I said, okay, well, it's probably going to catch up here because this is like 50% area. And, that was over here. Right over here. But I was saying, it's likely to put in a new swing high. And I said the low should be at 31, I want to say 31.66 is what I said. Val, is that what I said? 31.66? And then I said it should get up to 31.82.
Correct.
And golly, it did it. Did everything I wanted it to do. Except this. I didn't see this coming. Well, I wasn't really looking. But now, we were up so good this morning that, during the break, I didn't do anything. But now that we're down here, we've retraced this whole big candle right here. And then some. So now you got to draw your fibs from down here. Okay, so we're almost at 100% retracement on the 15-minute chart. And it's worth looking over here on the 30-minute. Okay, because there is support right here. And this is very bullish. So I think from here, see, this is bullish too. So I think from here, this level, well, it might get down here to 31.22 first, but this is all bullish right here on a larger time frame. Now, keeping that in mind, on the smaller time frame, I wouldn't expect much out of shorts, and I'd expect more out of longs. Okay, that's a way to look at it. Okay, now I don't, I don't know how much people take in when I'm talking in the morning. But I have to operate in, a very small time frame, and it's so that I can train people to learn how to look at the markets. And I mean, those of you guys that have been here for any length of time, I do the same thing all the time, over and over and over again. But when I say things like I did this morning, then that could give you a bias on the market. Like if I say, okay, well, we're almost done with like a 62% retracement, then you wouldn't want to go short anymore, because it was going back down, retracing backward or down. You wouldn't want to go short, or you wouldn't expect much out of any short trades. Not on the ES anyway. Gold, on the other hand, that 20-tick trade I had this morning on gold, that was perfect because the ES was going up. I was expecting gold to go down. So that's when you let it run. And okay, that's enough about that. I'm talking too much. Let me go back to the beginning. And this is where we started. All right. Now, right here at 9:30, there was a little bit of a trend going. The slingshot wasn't giving me the bounce off the BBC. So you didn't get anything right there. Now, using the other trade setups, which I'm going to try to identify for everybody more in the morning session. I'll tell you when I see them. I'm not going to trade them. Well, not in front of you. but because the integrity of the spreadsheet, and that's important to me. But anyway, we got to break even on this trade. Okay. And then Valerie had me look at something. I'm not throwing you under the bus here, Val. But she had me look up something that I still haven't done. And I missed all this. And then the cycle got down to the middle here, and we weren't going to do anything with this. Now, could we have done something with this? Is the question, right? If you use the other trade setups that we have, yeah, there was a ton of opportunity in here. Right here was one. Right here was one. Right here was one that didn't work out so well. Right here was one that made up for it. Right here was one. Right here was one. Right here was one. Right here was one. And all of those, except for one of them, were winning trades on this move up. All right. And the stop out wouldn't have been that bad. Anyway, doing the stuff that we do in the live training room. This right here, I missed that one. There was a lot going on this morning, so I missed a bunch. I missed that one. On this one here, I grabbed, 4 ticks. Then I had to break even. I missed that one, and I grabbed 10 ticks on that one. And using the other trades, there were more opportunities in here. Okay. PA, that's Pennsylvania, right? There was a long right here. There was, well, the trades kind of doubled up on each other here a couple of times. Well, anyway, let's just stick to what we do in the room. There was a shorting opportunity right here that I missed. I don't know why I missed that one. That was a great one, but I must have been doing something else in some other market. But this right here, there were a couple of times this morning, the highest probability trades they set up, and they made money every time. And this is one of them. You see how the MA1 stayed red and the cycle was red, and it hit the BBC? Highest probability trade. And it's also a head and shoulder pattern. And you can't discount those. The patterns, the head and shoulder pattern particularly, that's one of my favorites. See right here? is the head. And right here are the shoulders. Now you get an opportunity to short into a head and shoulder pattern using our stuff, and you get a close down below that neckline. You got to let that run, okay? Because you see it hardly pulled back at all on any of these candles. It pulled back one tick on each one until you get down here. And down here, the green line is all the way down into the cycle. So that's when you move your stop to break even. Okay. Well, not move your stop to break even. That's when you trail your stop right behind price. And you know, there was just a ton of opportunity today. A ton of opportunity. We had a break even there. Shorting opportunity here and here. And we took a break even there. Shorting opportunity there. Then it turned around and started running up and missed along there, missed along there, missed along there, and there. And then turned around and started going down, and this is during the break now. There was a shorting opportunity right here and here. And then it spun around and started going back up. And let's see, it looks like there was a long from right here for a little bit of a move up. Turned around, started going back down. There was a short right there. A short right there. Needed to put in lower swing, so we had to wait. There was nothing down here. Using the other trades, there was a 164 right here. Okay, there was 164 long counter trend right there, and then with the trend right here. Yeah. Wow, there was a lot of movement trying to break. I didn't realize there was that much movement trying to break. And I can't wait to hear what John has to say about it, because he keeps track of all the global events, and Dwayne does too. So I'll listen in on the next session. Well, I mean, once I'm done. But right here was a shorting opportunity. And then it got really sideways. The cycle had to reset. Another shorting opportunity right here that would have been a break even. Yeah, the market is capitulating. That's what you call it. Shorting opportunity there and there. And then it turned around, started going back up. While I've been talking, all this has been happening. There was a long opportunity there, and turned around again, shorting opportunity here. That leg down. The market is capitulating, I should say right now, because while I'm talking, it's bouncing all over the place. There was a long there, a short there, a long there, and there, and there, and there, and okay, now we're back to the end of the session. Or so far, current moments in the session. But in the last, say from 12:30, right here, it was at 41, we'll call it 42. It ran up to 52, so it went plus 10 points, and then it came back down 5 points in 9 minutes. So something's going on right now. I don't know what, but I'm sure John does. And so I'm gonna close this up, get back to trading, and go over what I did this morning one more time. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we made 16 ticks in the euro, we lost 7 in crude, we made 35 in gold, and made 14 on the ES. We're plus 555 on the morning session. That's per contract. It's one contract in 2 hours. Today it took 11 minutes and 2 trades to get to the goal for the day. And we took 13 trades this morning, but we missed a whole bunch, as I just showed you. So on the month now, we're up 35.58. That's over 16 days, averaging 222 per day. And on the year, we're up $6,357 over 35 days, averaging 181 per day. And that is per contract, 2 hours per day. Okay. Now, if you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. And over here in the right-hand column, this is 5-day free trial, apply.CFRN.net. If you click on that, you will be brought to this page where all we ask for is your name, your email, your phone number, and you can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button. You'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click on the confirmation link, we don't know you took the free trial. Okay, and with that, we can pass it back out. Fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. I am.
Thanks. Okay, and John's in. I can just open up his mic if you want.
Sure. Yeah, that'll be fine.
Okay. All right. His mic is open.
Hi there.
Hey, John.
Hey, John.
Welcome to the show.
Thanks. Pretty dramatic 12 or so hours. How many hours it is? 15 hours, something like that. Anyhow, as you know, I called you last night, kind of laid out the scenario that has actually happened. In other words, I thought that we would have a big rally overnight. We did. Then we came down and tested, and you know, when we came down and made that test, it basically set us up for a kind of a dynamically bullish scenario, which is unfolding right now. And not to disappoint, the market screamed higher early, and then it had this sort of 11 o'clock, probably 11:30, 45 correction, scare everybody. But this is actually potentially quite bullish because we didn't last very long and we're already off the lows. And if we can get back up, I think there's a pretty good chance we're going to get back up to the highs today. If this continues, it's a little risky because we are dealing with, you know.
Even if we closed here, we got a daily doji, and that looks bullish for a bounce into the next session.
Right. I mean, look, there is a formidable kind of a sell signal developing, which we have to respect. And if we did turn down, you know, all bets are off for the time being. But I think that there is a reasonable chance that we'll rally this afternoon. And it's kind of interesting how the market, you know, didn't really, you know, Apple and Microsoft and stuff didn't, you know, Microsoft didn't make a lower low yesterday, which was a sign that we might get a turn. And some of the stocks started getting their bullish, you know, they were sort of normalizing. I could get a sense that the stocks were normalizing. And here's the thing, you know, for the last few days, there was a lot of risk in buying the dips, you know, because the rallies were sometimes pretty short-lived, and if you were lucky, you made a few points, and then next thing you know, it's going down again. And then there was, you know, after hours last night, I noticed that, you know, the market had a little bit of a test and then it took off. And then around about, sort of around 8 o'clock, I think, there was a sudden, like, you know, kind of a mini version of this correction we just had a short while ago. It was like you know, we'd lost probably 30 or 40 points on the NASDAQ just like that. And the market kind of stopped and started clawing its way back higher, and that kind of gave me confidence that we were actually going to have a pretty good rally, continue higher into the night until, you know, the early hours of the morning when we had this you know, sell-off down to test the low. Now, you know, when the big lever in the sky goes from bearish to bullish, you know, you've got to be able to kind of recognize that when it happens. In other words, when that low was put in last night, basically the big lever did swing to bullish. And here's the thing, and this is a little tip for everybody. As you know, before this correction started, when we had the melt up, you know, the market's going higher and it's kind of making new all-time highs, and it's awfully hard to buy. You know, you sort of have a dip and you get a buy signal and maybe you don't do it, and then all of a sudden the thing runs higher, like, you know, like magic, you know, just like power is higher. This is what was happening on all these dips. You know, we had these corrections, scare everybody, and then we took off again. And really, you know, almost from when I came in this morning, we kind of got, the market kind of got its mojo back. And, you know, if you got in right on the turn, boy, you know, your next thing you know, you're making, you know, make $1,000 just like that. You know, dollar per contract, maybe a couple of thousand on a really strong rally this morning. So this is, and starting again here, we're just starting to pick up a little bit again. So you know, this is sort of back to the kind of bullish activity. So whoever's like, you know, kind of masterminding this, and there probably are some people doing that, they're doing a hell of a job to sort of get the mojo back again, and by the dip mentality is starting to work for everybody. So look, the interesting thing is, I guess most people who've got, you know, who are reasonably intelligent probably figured out that this thing is much worse than they're letting on over in China, and the rapidity with which some of these things are happening in, you know, Europe and Japan and Thailand and Korea is a little bit alarming because of the speed of what's going on. And you know, there's a video of somebody dropping dead in Iran. I mean, listen, this thing only came to light a few days ago in Iran, and it's a really, you know, pretty serious situation there already. You're sort of seeing those early days of what we saw in China like 2 months ago, where people were just like keeling over in the street. So that's a little bit alarming. However, you know, in the same way as the market bottomed in 1942, you know, 2.5 years before the end of World War II, the market figured that war was won. I'm not saying quite that we're at that point yet on this thing, but remember, the first bottom was made, and with the help of the Chinese stimulus, the first bottom was made when it came to light that, you know, this billionaire said, you know, there's 1.5 million people infected and 75,000 dead. And if you remember, I said, maybe where this is the worst point for the time being. And then we had a melt up, you know, to new highs from that point. And maybe this shakeout now is a similar kind of a correction to what we already had that could be nipped in the bud here with this rally today, this turnaround. But this is the, you know, we could rally really strongly today. I mean, there's an outside chance we could have a record up day today. That's a pretty extreme idea, but you have to be mindful of the possibility that it could happen. But you know, and we could continue a bit higher tomorrow. But I think 24 hours from now, we may be adopting a much more cautious stance on this thing because of the risk of this selling off Thursday afternoon, going down into Friday, and possibly another Armageddon type week next week. So that's what we're looking at. And actually, Dwayne, if you could put the S&P up there, oh, maybe the Nasdaq, because I'm not sure if it's the same on the S&P, but if you could put the Nasdaq up.
What sort of time frame do you want?
Probably about maybe a 60-minute.
Okay. We can do that.
Oh, no, probably no, maybe better a 2-hour chart, but better. Or, you know, we'll just make it an hour.
I was going to say I have to go to custom for the 2 hour.
There's an hourly for you.
Yeah. Can you bring all the data in?
Sure.
Squeeze it up a bit. Okay. Look, we obviously are on a developing buy here with this spike, but it is still a little risky. You know, we've got to kind of power higher to really confirm this, and we've got to get over 9,000. I mean, 9,000 is a pretty key number, and I'll tell you why. look at what happened. We held up around between 91 and 92. When we broke 91, bang, we went down. When we broke 9,000 rather, that was definitely a bad thing. And, actually coming down to about 87.50 is kind of where we would have expected this thing to bounce, given that it broke 9,000. Now, if this thing doesn't get back over 9,000 and sort of keels over and continues down, then you have to be very kind of, more in a bearish frame of mind than we are currently trying in this rally effort that's going on here. But it looks to me like we've got a chance of actually rebounding all the way up to 9,200 potentially, right? And that actually would, and then we could spend some time maybe going between 91 and 92, and that would be a possible head and shoulders type of bottom developing, right? Where if we continued higher and broke out above 92, we could potentially go all the way back up to 90, maybe 93.5 to where that gap is. And if it turned very bullish, then we're heading back up to all-time highs.
There's a 25-point opportunity overhead on the NQ, 89.75 up to 9,000.
Right. So the other thing is, actually, if you can put a 4-hour chart on, it might be better, Dwayne.
Sure.
Just to see.
There you go.
Okay, if you could just bring the full chart onto the page. Okay, and squeeze it up a bit. Okay, you can see the head and shoulders more effectively on this chart. Do you see that? How we could get back up to the 92 and potentially sort of create, what would be a really interesting intraday head and shoulders formation, right? And remember, we're coming into the end of the month, and there may be some good news economically that could power the market higher as well, in spite of all the drama. But here's the interesting risk, reward. If we sort of can't get above this 92.5, then the situation is actually fraught with risk, because while head and shoulders is a very reliable kind of a pattern, and by the way, if this thing does work, you can project the market like 500 points higher right off that head and shoulder. So they're going to take us up towards 9,700, and potentially put in a double top perhaps, or whatever. Could even power to new highs. Remember, you're dealing with remember that 10,000. Remember a while back I said, the market's having trouble getting through a big number like 10,000. It tends to come back and get the energy up to go all the way. And if we did recover, as I said yesterday to you, Dwayne, I mean, listen, you can't never rule anything out, but if we were able to take back these 2,000 points here within a couple of days with perhaps some intervention, look, when the Chinese announced their massive intervention at the bottom of the last correction, the shorts didn't take it seriously, and they got burnt pretty badly on this rally. So I think if anything like that comes out here, and they could come out on Sunday. I mean, we could be, and this thing could rip higher, because this time, if they announce a kind of an intervention, I think there'd be a massive short covering very quickly. And there's obviously a lot of people short right now in this market, given what's happened. So head and shoulders is key, because while the head and shoulders is a super reliable deal, there's possibly the worst thing in the world is a negated head and shoulders. In other words, if we go up here to 9,200 and it looks like we're going to break higher, and then we roll over because the situation gets out of control or something, the next downside leg could be devastating. And that's what you got to be sort of mindful of. And unfortunately, that might be the if they don't intervene and kind of support the market, the likelihood of that happening are pretty high, actually, especially with a lot of the complacency that's, been in the market already, and also the risk of, and remember, we said, March or April, the market could really take a big hit. So, even in one day, you could have a severe, 2,000 point down day, or maybe even 3,000. There is, these people who've never seen a correction like this are, very vulnerable to that kind
John,
of thing.
there was a
happening.
question. This head and shoulders you're talking about on the 4-hour NQ.
Yeah.
Can you point it out?
Yeah. Well, we made the head, potentially we're making the head right now. And if we rally up to 9,200, then you can see this is a reverse head and shoulders, right?
Sure.
So, and if we consolidate here tomorrow and Friday, and then if they come out on the weekend and say they're going to intervene or something, then the head and shoulders could.
There's the neckline there. If
Right,
we
exactly.
come up and consolidate at 9,200.
Yeah.
Okay.
If they don't do anything and things get worse, and the thing rolls over, then it's obviously going to be pretty bad. And the airline stocks, United and FedEx and all these, I think American Airlines made new post IPO lows yesterday. And this airline, Buffett once said something like, this guy, he's not invincible. His biggest mistake, I think, was he bought US Air at like $72 and rode it all the way down to $2 before the thing recovered eventually.
That'll leave a mark.
But some people just won't touch airlines, no matter how good they are, because even though they've been fantastic recently, when they get a hit, they get hit really, really hard, and it looks like they're going to be in for the biggest test of a lifetime here. Now they're going to go from feast to famine pretty quickly, and that is kind of really risky. So
I bought Eastern Air right before Trump bought it.
did he make? What happened? Did he?
No, I made money. I bought it for the dividends. I had the what do you call it? I don't even know. I haven't traded equities in so long. But I bought the B, whatever it was. But they were paying good dividends, and I bought it and I held it for probably 6 months, and I made money on the stock and on the dividends, and then I dumped it, and then Trump bought it, and I don't know what happened after that.
Good for you. We're just getting a bit of a sell on the VIXs now. As I was saying to Dwayne last night, if you could put up the VIXs, the UVXY.
There we go.
The daily. Part of the thing that gave me, if you can squeeze it up a little bit. Okay. Do you see that last time the VIX, this was one of our targets we talked about a while back, okay? And what kind of gave me the clue we'd have a rally last night is when they sold the VIX off late, that little tail kind of gave me a warning not to be long the VIX. And we actually got a buy signal near the lows this morning, coincidentally, with the first sell-off. And right now I'm getting a bit of a sell on the VIX. If you want to go to like a 3 or 4 minute chart, you can see that developing.
There's 3 minutes.
Yeah, so, we came up and tried to fill that gap. If this VIX starts heading down, it's probably going to help the market, but we're not quite there yet. Going back to that other, if you can go back to the daily for a second. This kind of consolidation here, sort of bullish up day and then an extension, and this sort of like pause day here is actually pretty dangerously bullish for the VIX, which would be the worst case scenario for the market, i.e. rolling over from here and going down.
Correct.
So you have to keep that in mind, because I think, this thing is capable of kind of gapping higher, maybe going through 20 and certainly going up to 30, probably maybe 35, 34, 35, if things get really bad. And there's already a pretty big gap there. There's a double breakaway gap actually on this thing, which is pretty bullish. I mean, these things they don't end in a whimper. They tend to be the start of something pretty phenomenal. So this is what you gotta keep in mind. That is definitely on the cards here. This actually is really a kind of a pretty dangerous formation to be, for an upside move, and obviously downside move in the market. So unless there's a big red down day today on this VIX that kind of negates this thing, and listen, that might only just be a test of the gap, because this is such a formidable gap. It's going to take something pretty big to look. If we did go to have a down day today and closed on the low, and then gap down tomorrow, maybe things are going to be much better. But just eyeballing that formation right now, it's kind of different from everything we've had before. Historically, going back a ways, this is really kind of a breakout of epic proportions off a kind of a double bottom. That is, there's only one word to describe it, and it is potentially dynamically bullish. There's no other way to describe it, frankly, as it looks like right now. And one of the things that, when you're trading these things, they kind of can fool you a lot, because when we had the first downer, this little up day here, the gap day, it really was a little bit disappointing. I thought there'd be a bigger move to the upside, given the how much of a given we had 1,000-point down day. You know what I mean? In other words, we didn't move much for 1,000 points. You see what I mean? Right?
Gold
Right.
is tanking right now, and
Yeah,
it's
it
looking
looks like
it
looks like the
1638.
right. The rally scenario is developing here for sure.
It is. It is definitely.
right now, and that's great. The best thing that can happen in the world is for this thing to get negated here, which you can't rule out happening. and look, it could do something like what it did back in October previously, where it ran up, had it down, and had another test, and then eventually went down. So I think the test might go to a higher high and then down if it's not going to be too serious. But what I'm saying is that day we went up, down 1,000 points. I would have thought we would have gone to about 18, the first day, and gone even higher the second day. So I don't know whether they're manipulating this thing.
What market are you talking about, John?
I'm talking about the VIX. In other words,
Okay.
what you normally see in a regular market is if the VIX, it took a long time for this thing to kind of get going, and in my opinion, the premium was not there, probably because I think whoever's behind, the mastermind behind these markets, were probably pushing the VIX lower to try and keep the market up. In other words, so what I'm saying is the premium only really started to come into the VIX yesterday with the big up day. And so what I'm also saying is that if things go down badly to the market and this thing starts powering on, I think you'll see much higher prices and a much bigger premium develop. In other words, people will just go for those VIXs as a kind of an insurance policy against something really terrible happening. So, and if you see that happening, I think you've got to go. You got to go long the VIXs if you've got the aptitude to do it.
Right.
So, but they're not easy to trade. Sometimes when you're in these things, the futures run up and the VIX doesn't really respond the same. It's kind of tricky trading them. It's like trading options. Sometimes it doesn't always go the way you think. So in some respects, my strategy was, and I think I said this quite a while ago, was to go long the VIX, as on this, in anticipation of trouble, and stay long, just stick through it, because if you try and trade in and out of it, you could miss the next up move, and then it's very hard chasing the market. It's a very difficult kind of a thing. So that's really, that's a kind of, as long as you've got a low entry point, if you got in around 11 or 12 and you're sitting on it right now, I'm trying to stick with it, because just in case you wake up one morning and the Dow's down another 1,000 points, and unfortunately that's probably a high probability, somewhere in the future, possibly sooner, not necessarily later.
Gotcha. By the way, beginning I think as early as tomorrow, during the live show, we'll be streaming not only from our own website. We already stream on YouTube, we already stream on Facebook, we already stream live on Twitter. But tomorrow we should go live on the TradingView platform as well. So our entire radio show, the entire broadcast, will be available as a live stream in real time on the TradingView platform.
Wow, that's your data supply, right?
Well, that's the charts we're looking at right now.
Oh, okay. Wow. How many people are looking at that?
Well, they've got millions and millions of visitors monthly.
Wow.
Hundreds of thousands daily. So, how many will choose to tune into our live stream?
You should try and do some kind of a thing where people who log on get a little, get a way to look at the show,
Yeah, they've got it set up. When anybody goes, they'll be able to see that the live stream's available. So,
yeah. Why don't you put the nugget up?
There we go. That's the daily.
Okay, look, this is one of these situations that are a little bit like the VIXs, but this thing has kind of run ahead of itself.
The buy signal is at 38.80. Take profit at 42.
Right. Well, we had this dramatic breakout off of Doji, remember? And we ran up pretty. Listen, this is one of the fastest rallies we've ever had in this thing. And of course, it got a bit overdone. And now we've got this sneaky kind of update developing here that I believe is probably, well, again, depending on the rest of the market and what we've just talked about, it could lead to not just another up leg, but a pretty spectacular up leg. It could take us up to 50 or more on this thing, if we, if the worst comes to the worst. Given it's such a strong reversal, if this thing got negated to the downside, then it might mean we could come down to 32 and possibly then turn around. It's just a hard call. But the gold can go up with the market. So even if the market actually turns very bullish here, the gold could actually go up with it. It did already before. So remember, especially if they're stimulating the market, the gold is probably going to benefit from that. and it's certainly going to benefit more in time as that happens. So right now, I noticed that Royal Gold has also turned up a little bit.
Right.
And,
right now, in my time frame, in my little world, my 4-tick range world that I have to live in, gold just made a huge run up, and the indexes are going down. So they're orderly markets right now. That's what should happen.
There's gold right there. That's the rally we were looking for.
Yep, there it is.
Yeah, well, look, we're sort of gone, in spite of the knockout that we just had, we're listen, it went down, it got slammed down yesterday afternoon, and it basically spiked back up. It just made the lows right there on a test of 1630 or something, a bit more, maybe a bit lower below that. And maybe you can put the gold chart up.
I've got it up right now, John Daly.
That's the CFT. No, is that gold? That's gold.
It's the same as gold.
Your audio just got a little low, John. I don't know if you just moved or what happened.
Are you talking about Barrick gold? There's Barrick gold. Which one did you want, John?
Gold, like the gold futures.
Oh, you want gold futures? Okay.
April.
There we go. All right, that's daily.
Yeah, you see, interesting. You see how
this is delayed. This particular feed is delayed by 20 minutes.
Right, but look at what happened yesterday. We slammed down, went all the way. It kind of, and then came back up, and so this is actually, potentially pretty bullish because it seems like we tend to rally towards the end of the week, and the next up leg probably going to take us 1750, maybe even 1850, something like that. So it's looking pretty good, I think, right now.
I think so.
Yeah, and look, this market, this sort of not got its mojo. Just kind of lost a bit of its mojo here. So this is the thing. You can think you've got the UVXY nailed, and all of a sudden it runs away from you to the upside. So you remember you're dealing with this. News could come out at any time that could tank the market. You have to keep that in mind, no matter how good it looked this morning. And I did say at the beginning of the show, there is a developing very strong sell signal in this market that if it's not, if we do rally up and make this head and shoulders, it would blow that sell signal out of the water. It would negate it completely, which would be very, very bullish. But it's staring at you right now, and it's really a big deal.
Yeah, right now, on the 30-minute right there, what we're looking at on Dwayne's chart is the head and one shoulder, and it's trying to build the other shoulder.
Yeah.
And if it builds it and breaks it, then that's bad news.
Yeah, no, look, I mean, it's still, even the way it is right now, it's kind of potentially making a flag here. So, listen, it might take till 2 o'clock this afternoon or 2:30 before they can, rally this thing. But I think if they do rally it, you're going to see something pretty spectacular to the upside before the day is out.
Yeah, I was thinking that earlier too when I was showing my charts earlier. I was thinking, using Fibonacci stuff. That we're at a point right here. I mean, and we actually hit the point. And I'm looking at my 30-minute chart, not Dwayne's, but we hit the point, and our indicators are suggesting that it's going to move up, and it's going to move up to 3182. Yeah. 3182. Yeah. And that's, so that's, it's a big move.
Yeah. Okie doke.
All right, John.
All righty. Listen, thanks very much.
Hey, thank you.
Yeah. Good work by everybody.
Good
Thanks
job.
a lot, Mike.
All right. Thanks so much. Great call last night. All right. Talk to you later.
Thank you.
All right, guys. We're looking at the 30-minute and the 5-minute. Okay. Earlier, as this green candle was building, that was bullish. We had blue and climbing. We had blue above the 50-yard line. This bullish candle rolled over into a bearish candle. Now, the bearish cross in the 5 minute took place at noon Eastern. And so what do we get? We got a leg. We got a retracement. Earlier, when this chart looked bullish, we were looking for price to get above the BBC, hold a pullback, and provide us with a long entry. As long as this candle's red, there's no buying red candles, no selling green candles. Okay, so as long as this candle's red, we just had bullish off the green candle, turn bearish, because the deciding line is the BBC. When price is below it, you anticipate lower prices. When price is above it, you anticipate higher prices. Okay, and so when I put bullish on this chart, we had a green candle, which sold off. Now we're printing a red candle. Okay, so what happens if we pull up now to the BBC? Do we sell it? Well, you've got blue and climbing here. Okay, and if price pulls up to the BBC, you'll see it pulling up over here on the 30 as well, right? The only issue you'll have is blue and climbing is going to follow price right up to the BBC. A close on the 5 minute below blue and climbing, which will then, as we start to move down, will become red and falling, if that's how it unfolds, then there's your entry, which would potentially be something like 31.44, maybe down to 31.40, because if this holds as a swing low, getting short up here means this is support here. Now looking at the 30, looking at this, we may not get the pullback. The pullback we already had may be it. You see, we're closing right now on a 5 minute. Got 2 minutes left. No, we got 3 minutes left. If we close below blue and climbing, then blue and climbing will become red and falling. What do we got over here? Red and falling. What's happened here? We're still above the 50, but we've turned red. Okay? So, the 30 minute is like a roadmap. It shows you what the market's trying to do. You simply need your smaller time frame to sync up with the bigger picture direction. And guess what? Trading's not easy, but it can be that simple. What do we got? We got red and falling. We got red and falling. Could you just short this looking at support down around 31.30? That's a 5-point trade. You could. However, your highest probability is always going to be that touch and fail at the BBC, whether you're approaching it from below or approaching it from above. In the live trading room every day, Michael trains you on a range chart. It moves quicker than a 5 minute because he wants to be able to show you as many trade opportunities as possible based off of our very simple trade setup. Complicated is not better. Very expensive is not better. Simple and affordable is really all you need.
And you know, if you have indicators on your chart that you're not using, or indicators that you're not really sure about, you really should just take them off. Because the more stuff you have on the chart, the more difficult it's going to be for you to make a decision.
Kick them to the curb.
Right, and you don't need that. Everybody needs to just have what they need to make money. That's what I mean. We're not in here because we like to see the colors and all that. We're in here because we want to make money, and it's not just for us; it's for all of us. And you know, if you have other stuff that you're doing and it's working for you, then okay. But if you have other stuff that you're doing and you've been on a losing streak, well, then we need to talk, and that's where the one-on-one training comes in. Okay, and we're willing to do it with all of you, really.
You can get the party started by calling Valerie at 949-42-EMINI. You can email her support at CFRN.net. You can go right to eminitrainingschool.com. And you can also look at eminifuturestrading.com. Breaks down some of the different indicators. Now that breakdown package that you'll see on that page is no longer available, but there's a lot of information and of course an opportunity for you to get signed up today. Begin your training tonight at the Globex Open. No money down, no payments, no interest for 6 full months. If whatever you're doing, as Michael said, is not bearing good fruit, then it's time to learn how markets work. Instead of depending upon sleight of hand and trickery and chicanery and all of that stuff, why not just break it down to the simplest common denominator? Get rid of the noise, learn to read the chart, learn to understand how markets work, and then as I just showed you, the 30-minute chart. Now, who's going to go long here? Well, nobody that we've trained. And remember what I said about this potential drop? Now you see how we got red and falling, red and flat, red and falling. The window of opportunity, 31.35, maybe down to 31.30. It's not the highest probability trade setup. The highest probability trade setup was back here. Okay, so we'll pull up to the BBC. Now, after that down close, that put price at about 31.46, and since then we've dropped 10 points. That's a good day in the market. So, if you have any questions, put them in the chat box. We'll be happy to answer them. Concierge Trade Alerts came out not last night as they normally do. They came out this morning, and I will show them to you. Again, in case you want to grab a screenshot.
And James, I just sent you the link to the meeting this afternoon. Okay.
8:35 a.m. Eastern this morning is when the alerts come out. Typically they come out shortly after the Globex Open each evening. Wasn't possible last night. So 8:35 this morning. Most of them, I believe, have not triggered. We'll take a quick peek. On the S&P, we wanted to be long above 3206. Obviously, we haven't seen that. Now, the short side is down at 3119. Could that come into play? It could. It all depends upon what happens right here. Okay. On the way down, where's support? So if you're short on that 5-minute, you got to make sure that you're aware. This is 5-minute support at 31.27, but you've also got 30-minute support at that same area. Okay. Is this looking more and more like a window of opportunity? As long as price stays below red and falling, absolutely. On the Dow, the numbers to be long were 27,520, and the swing high was 27,519. Well, let me repeat that. The alert this morning said to consider being long at 27,520. Swing high of the market, as you can see on the pop-up, 27,519. Is that magic? How do you do that? No, there's no magic. It's you understanding how markets work, which then allows you to learn how to read a chart. And then the next step is we teach you how to use our indicators to put on and take off only high probability trade setups. Doesn't make it easy, but it can be simple. Short side for the Dow, 26,810. We have not been there since the alerts came out. Remember, they came out during this candle, the 8:30 30-minute candle. Okay, normally they come out right after the Globex open. Here's the Russell. Now the Russell, consider being long 1604. We haven't seen that. Short 1560. We haven't seen that. If you short 1560, you need to be hawking that thing by the time you get down to 1555, because that's where your support is. So where's the window of opportunity? Right there. Okay. NQ. Go back to our 30-minute. All right. The alert for the NQ was to be long above 89.95. Okay, this is the 8:30 candle where the alerts came out. So 89.95. Going to be up here somewhere. That's about it. So we put in a high at 90.15, so that's a 20-point move. Another 20-point move. That's a 40-plus point move, which, by the way, at $20 a point is $800 per contract traded. And the short side on the NQ, 88.07, which we've not seen since the alert came out. On crude, the alert was to be short 48.90, and looks like the swing low is 48.99. So no trigger. Long side for crude 50.85. The high so far 50.44. Okay, so no triggers there. Is there a setup on crude right now based on a 30-minute chart? Nope. You're below the BBC and you're building a green candle. That's like oil and water. They don't mix. Is there a little bit of opportunity there? Sure. But the highest probability is as price pulls back up to the BBC and this red and falling starts to track and we get a bearish cross. See how that just moved? Because we just got a new 30-minute candle. So that's the story on crude. And the last one we'll go to is gold. Okay. And on gold, consider being long 1664 hasn't happened. Consider being short 1637. It did happen. It happened very shortly after I put the alert out. There's 1637. And we dropped to what, 1627? So that's a 10-point move. That's $1,000 per contract traded. Okay. We treat every market the same. We don't teach you one method for the S&P and another for crude and another for gold. The only people who do that are people who don't understand how markets work. Because if they understood how markets work, they would realize they don't need all these different methodologies and strategies and 1,000 indicators. That's just noise. And it's all also income for the people that sell all the different strategies and upgrades and a million other things. There's always something to buy that's going to make you a better trader. I'm telling you now, the only thing that's going to make you a trader at all is to learn how markets work. If you want to learn, 949-42 Emini, support at CFRN.net, EminiTradingSchool.com. Now I'm going to show you the one logic alert that I put out this morning. This one right here. Consider being long, 31.59. Initial target, 31.61. If it continued to run, well, we have a weekly trading zone, the lowest weekly trading zone, overhead at 32.39. So, how did that play out? I'll show you. Here's the ES 30-minute. Okay. Here's the 9:30 opening candle. Now that alert came out at 10:02 a.m. This candle. And what did it say to do? As price was down here testing the BBC on this pullback, the Logic 247 alert went out to consider being long 31.59. And it promptly ran up 20 points. And then when price closed back below that step line, that tells you price is trying to get back to the BBC. So if you're long, you can wait and see if it bounces again, or you can take your profit right there. Because let's face it, getting out at a swing high is tough. You take your profit there, let it pull back, and if it holds, feel free to take that ride again. But as we start getting into this wick portion, I mean, look where this failed. It's logical. It's not magic. It's logic. So, if you want to learn to trade the market in a logical fashion, like I just showed you live in real time. If you missed part of it, when it renders and posts, what did I say? 31.35 down to 31.30. Okay, now, did I say that this could be potential support? I did. Does that mean it has to be? No. But you need to be aware of it. Okay? If price trades through it, your next window of opportunity is here. Okay? All right. If you have any questions about anything we've covered, get a hold of us. Call us, 949-42-EMINI. Email us, support@cfrn.net. Visit us at eminitrainingschool.com. Of course, our mothership still resides at CFRN.net. Everything that you see on this radio program is not complicated, it's not expensive. You can do what we do. Because there is no sleight of hand, there are no parlor tricks. We just teach you how markets work. Does that mean you're always going to have 100% winning trades? Of course not. And please, if anyone tries to sell you that package, run, don't walk in the other direction. Because that's just not going to happen. Along with everything you see on the screen, 2 hours of live training every day in the live training room, you get unlimited one-on-one mentoring. That's private, one-on-one. You learn our proprietary methodology. You own our indicators for life. And you get alerts via Logic 247 around the clock. These statistics have held true since they were published by Futures Magazine in 2006. They didn't say why, so I embarked on a mission to find out why, and it became evident. 9 out of 10 never have a teacher. What? I'm going to pay somebody to teach me how to trade? Well, 9 out of people choose not to. If you want to be the 1 out of 10, you're going to need some help. Now, just because you buy some indicators and a PDF with all kind of back-tested strategies about how awesome it is, that's not the same as having a personal mentor. Someone who will walk through the charts with you as needed. All you have to do is book your appointment. Okay? All right, let's go to our good word for the day. Get out of here and go back to work. Yesterday we talked about God's recovery plan for you. Today, I find my notes. We've all been told, you got to read the Bible, read the Word, eat the Word, consume the Word, gnaw on the Word, chew the Word. You know, a lot of that just, I'm not crazy about. But I do think reading it and understanding that the basic concepts are pretty important if you're trying to live a Christian life. The entrance of your words gives light. It gives understanding to the simple. That's Psalm 119. In December of 2005, Brian Hardin says God told him to podcast the Bible. Now, we're old friends with Brian Hardin. You may have heard of the Daily Audio Bible. Yeah. Big fans for a long time. If you've never experienced it, just Google or just go to dailyaudiobible.com. You can even put an app on your phone. Brian reads the Word to you every day. And he's a clever guy. He can say all those hard names of the Old Testament. Each day you'll get a little bit of Old Testament, a little bit of New Testament, a psalm and a proverb. He ties them all together. Takes about 30 minutes. And in 1 year, you'll have read the whole Bible. Or had it read to you. So, Brian Hardin writes, on New Year's Eve, when I read my first podcast, I said, I'm Brian. I have no broadcast experience. I really don't know what I'm doing, but I plan to read through the Bible this year. If you get this, here's my email address. He goes on to say, I expected maybe 5 people would sign up. On New Year's Day 2006, he got 257 responses. And by June of the same year, the Daily Audio Bible had been downloaded 200,000 times. Oh, by the way, did I mention it's free? Now, following our 6th anniversary, actually, he's up to his 15th anniversary now. But when he wrote this, on New Year's Day 2006, remember, he got 257 responses. By June of the same year, the app was downloaded 200,000 times. And way back on his 6th anniversary, it had been downloaded more than 51 million times, and still one of the top podcasts on iTunes. With more than 1.5 million downloads monthly now, the Daily Audio Bible is one of the most listened to podcasts in the world. Brian says we've become a vast online family that prays and hears the Bible together. When somebody calls or goes into the online prayer line with a request, thousands of people pray for that person. He says we receive an endless stream of emails from disenfranchised believers who have found this place very appealing. Separated couples who had nothing left to do but sign divorce papers started listening to the Bible and somehow found their marriages restored. Brian says, I can't tell you how many stories of people who are hopeless, I mean suicidally hopeless, have found comfort in God's Word and were restored. The Bible has a voice, and if given a chance to speak in context, it will create amazing things in your heart. The Bible can transform even the most tangled life. Brian says, I know this for a fact because it radically changed mine. One of my favorite parts of the Daily Audio Bible is when Brian has finished reading for the session, he plays back some of the many messages that are left on the voicemail. There's prayer requests, there's praise reports, and after a few days, a few weeks, you really start to feel the connection with these people, with this community, this global community of believers. And it's free. DailyAudioBible.com. Here's the bottom line. Whether you read it or have it read to you, reading the Bible will change your life. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, Call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.